Domestically, of course, we've seen the real estate implosion of up to 33% if we look at the median home price on the Case-Shiller index for the 10 and 20 city indexes. I watched an interview with Robert Shiller and Mr. Case there, the founders and creators of the index, and now they're calling for at least another 20, perhaps even 30% further slide here in residential. And of course, we're undergoing now the commercial implosion as we speak. You know, there's a giant mountain of these adjustable rate mortgages, options only, the liar's loans, aka Alt-A, a host of other toxic loans that are just beginning to recast and expected to do so at a parabolic rate over the next year or two. Are you factoring this into your forecasts for precious metals, and do you think this is going to be an important component?
Yeah, you know, it's just one of the many things that creates a negative outlook for the U.S. dollar and, you know, most national currencies. You know, because they're not backed by anything anymore, they can be created out of thin air, even to buy toxic paper from the banking system, which is what the Federal Reserve has been doing by blowing up its balance sheet the way it has over the past year or so. So, yeah, it is just another factor that suggests that this 40-year experiment with fiat currency, you know, it's only since 1971 that the dollar's not been tied to gold. This 40-year experiment with fiat currency is coming to an end. And, you know, it's just more evidence to suggest that in order to protect yourself from some of the present problems and what's likely to unfold in the future, you really have to own gold and silver. And I'm talking here, of course, again, about physical gold and silver.
You know, you bring up this experiment with fiat currencies, finishing up a book soon to be published called Wealth Building Strategies. And I examine in chapter 12 all of the former central banks, the experiments, if you will, with central banks going all the way back to before, actually, the Revolutionary War. We've had 4, if we include the current Federal Reserve. Every single time we've had one of these central banks, they've always overextended credit, and it required a almost superhuman-like individual like Andrew Jackson to slay the beast. Do you believe that we may be entering a time where there will be such a backlash against this institution that we may lose our central bank?
Yeah, you know, I think we should lose the central bank. You know, I'm 100% behind Ron Paul's effort to end the Fed. You know, central banks are not helpful to economic activity nor preserving the purchasing power of the dollar. Central banks are there for only one reason. It's to make sure that the federal government or, you know, governments anywhere around the world where there's a central bank operating have enough currency to meet the spending aspirations of politicians. And that's why fiat currency gets into problems and ultimately collapses, because it's created to excess. So, you know, I really think we should get rid of the central bank. I wrote a monograph a few years ago entitled The Barbarous Relic. It's not what you think. You know, everybody says gold or the gold standard is the barbarous relic, you know, quoting Keynes. But in my mind, the barbarous relic is really central banking, and they've long outlived their usefulness. We need to go back to what the framers of the Constitution created, which was essentially gold and silver as the currency of the country.
I spoke with Steve Forbes, and he completely concurs with you and Ron Paul. The central bank has outlived its usefulness, and that gold is the only sound money. And hopefully it'll become a more mainstream view, you know, as this progresses. Clearly, the U.S. dollar index continues to benefit from the Eurozone debt concerns, including record deficits as well as unrest and strikes in Greece, Portugal, Spain as well, having some issues. A continued dovish stance by the European central bankers. Add that to our strong domestic numbers that we saw, 9.6% unemployment rate. Well, we've dropped under 10%. If we add this all up, it looks like a positive situation for the greenback. It's been in full rally mode for about 10 weeks. Do you expect this trend to persist?
It may continue for a few more weeks. You know, it may be ending right now. It does look like it's getting a little toppy here, and it has been a pretty good bear market bounce for the dollar and the dollar index. But, you know, what we're seeing is an emotional knee-jerk reaction. People are moving out of the dollar, out of the euro into the dollar, thinking that, you know, that's a better place to keep their money for the time being. But all of this hot money is basically very disruptive to economic activity. And I think the key is that more and more of this hot money is going to be finding the safest haven of all, which of course is the precious metals.
Do you care to make any comments or forecasts on the general stock market?
My view has been for some time that the stock market is going to keep going higher. And the reason is that we're on the road to hyperinflation. If you look at countries around the world where hyperinflation has been a problem, the stock market continues to rise, not because of good economic conditions or not forecasting better economic conditions down the road, but because so much currency is being created, it has to end up somewhere. And one of the ways that it ends up being spent is purchasing the equities of companies that are oil producers, commodity producers, gold miners, equities that are basically companies that are producing wealth by creating commodities. My view is that the stock market is going to continue going higher as the longer-term problems with the dollar continue to emerge.
Very good. And I would guess then that your view on precious metals would be very similar, if not more favorable. You've outlined the fundamental argument, but, the technical picture is still quite constructive for the yellow metal. We appear to be winding up for the next move to that 1,300 target that you've outlined in your work as a potential in the first quarter of this year, and you've stated as high as maybe 2,000 by year end.
When I did my forecast last month, I was saying that the low for the year is likely to be early in the first quarter. And I thought, maybe last week or so ago when we were at 1080, we were going to hold that level, and we did bounce a little bit. But, it didn't hold. We've now come back below it. I think there's a lot of substance to the point of view that there's a floor under the market at $1,050 an ounce, because that's where the Reserve Bank of India announced its purchase of gold from the IMF. And the thinking is that if gold gets down to that level again, there are going to be other central banks in the market, buying at that price. So, I think the low is behind us for the year. I think we're going to go much higher, and it's going to be driven principally by a demand for physical metal and a short covering squeeze and problems with the dollar. What we've seen for the financial crisis is an indication of what's still yet to come. The financial crisis is not over. And in that kind of environment, you need a safe haven, and gold is the safest haven of them all.
More than likely, we'll see margin selling and things of that nature, which really just sets the stage for bargain precious metals.
Like it was, last week I did an article for my FGMR.com site, buying metal at bargain basement prices when it was down there at the 1060 area. I think if you look at how relatively cheap gold is, as well as it's done, it's still on a relative valuation basis very cheap by all of my measures. So, Chris, it's basically the same strategy that I've been pursuing all decade long. We've come a long way in the precious metals, but I think we still have a long way to go. And my basic view is, save sound money, save gold, save silver. Don't save U.S. dollars or any national currency. I mean, savings are always a good thing, for that rainy day, but you want to save something that's going to protect your wealth, and the precious metals do that. A
winning formula by any measure. For folks who'd like to find out more about gold money, as well as your book, please tell them how they can do so.
The book, The Collapse of the Dollar, is available on Amazon.com and in most bookstores. And goldmoney.com, you can find us on the Internet. We're storing over $850 million of gold and silver for our customers, and we're using vaults in London and Zurich.
Well, sir, I want to thank you so much for joining us on the broadcast today.
Thank you very much, Chris. It's always a pleasure to speak with you.